There's a certain property type that's 76% more likely to list and sell their home than other property types. If you want to know what that is, you're in the right place. Let's chat. Hi, I'm Mike Cerrone with the Comeback Agent, and I'm on a quest to sell 25 homes in 2025 as I'm coming back from a 15-year absence from selling real estate, from actively selling. And so as I'm getting into it, I'm in the first week of January, and I'm looking at my options to make sure that I'm spending my time where I'm going to get the best return. And so one of the things that I had heard in the past was that NOO, non-owner occupied properties, these are also known, by the way, as absentee owners, landlords, investors, second homes, this category of people who, if you looked in the public record, there's an address and the mailing address goes somewhere else. That's how you find these people, by the way. But basically, it's someone who does not live in the property that they own. So this property, the homeowner doesn't live in it. So that's an NOO, non-owner occupied property. Or again, absentee owner is another term that's popular out there right now. Well, I'd heard about this market, and some of the stats had grabbed me from some people who are talking nationally, and they had talked about, for instance, that 25% of all home sales are from NOO, non-owner occupied. And that's kind of interesting because if that's true, and let's say you only have 10% of the properties in your market are non-owner occupied, but they're accounting for 25% of the sales, then that's a very active market, and one that you should definitely consider looking at and working. And the flip side, though, if it turns out that half of the properties in your market are NOO and it's only accounting for 25% of the sales, then that's actually not very good, right? So you got to do some research on your own market, and I did that, and I'm going to share those results with you in just a minute. Before I do, I'll just mention that there are other types of, there's a bajillion different ways to go after business. I'm focusing on listings, okay, so I'll tell you that because I want to control my time. I'm also focusing in areas where there's a little bit less competition. That's what I'm looking for. So expireds and FSBOs are like the best place to go as far as action. And I may end up going back into that market, but I put my toe in it over the years, and it's very aggressive, which is okay. I probably could do okay there if I really focused on it. But I'm trying to find a market that's not as intense, but I can still get a really good foothold. That's what I've done in the past. I find a niche in the businesses I've been successful in. I find a niche and narrow that niche as tight as I can and get really good at that and become kind of an expert in that niche. So that's why I'm looking at this NOO market, this investor landlord market, to try to see, is there a niche there that we can create a little bit of specialty and therefore attract people, and it's just easier to work with them. So that's the background of why I'm looking into this. Now let's get back into that data on the absentee owners. Sorry about the pause there. Just I'm just doing this right off the cuff. So let's go into some of the research I did, and I'm going to actually show you some stats. And I'm going to open up my screen so you can see something that I just wrote down. And it's actually an email I'm going to send out to my people. I send out a daily email. Let me close this so you can see it better. And where is that? Loading there. Okay, and I'll move this out of the way so that's not going to distract. All right, so this is just an email I've created, but it has all the data in it, so that's why I'm going to use it. And so let's go down. I already gave you kind of this background. Let's get into the stats. So here are my results. Hopefully you can see this in my zip code, and I'll be reading it for you as well. So the bottom line is this. In my area, I mentioned there was a theory that 25% of the homes sold are NOO. So I looked for my zip code. I just did research in my zip code as of today to figure this out. And it turns out that 26% of the properties for sale in my MLS right now, the actives and the pendings, are non-owner occupied. That blew my mind. It's like they said 25%, and this was an older video. It was like 4 years old. And yet today, it's 26% in my zip code. So if you want to follow this, by the way, make sure you do the research on your area, your zip code or your sub area, whatever you're working. But for me, it's 26%. That really surprised me. And I looked, by the way, for actives and unders because that's what I can track easily to see whether it's currently owner-occupied, non-owner occupied. I tried to do this research a year or two ago, and I tried to do it off the sales data, but the sales data is really difficult to go back after the sale to see the person that was selling the property, whether they were owner-occupied or non-owner occupied. So that's what, boom, a little light bulb went off, and I said, let me look at actives and pendings because I can still see who the seller is, the owner of the property. All right, long-winded answer there, but that's why I'm doing it this way, actives and pendings. And 26% of them are NOO, which is crazy. That's bottom line. And the other thing that is the big one is right here. 76%, NOOs, non-owner occupied, are 76% more likely to list and sell than owner-occupied properties. Whew, that's the big one. Those are the two huge conclusions. Now we'll go through kind of the data and how I got there. But those are big if you start thinking about it. And well, I guess why is that big? Well, you're always looking for a market that has a lot more action, a lot more opportunity to win. And as I get deeper in this, you'll see why that's important. And I'll show it in another way. But 76% more likely to list is pretty big. That's almost double. So I like that a lot. And let me keep going. So active listings. Was the raw data in my MLS right now. This is I think this was January 5th, right at the beginning of the year. We had 35 owner-occupied and 12 non-owner occupied that were actively for sale. And then under contract or pendings, we had 17 were owner-occupied and 6 were non-owner occupied. And interestingly, I don't know if it's a fluke or what, but both of them turned out to be the non-owner occupied was 26%. I expected it to be a little different, but boom, it was right on. So that's a pretty good number based on my initial research. Now, I went into the public records. I needed some more information, and that's right here. So the total owner-occupied in my zip code is 10,331, and the total non-owner-occupied properties are 2,026 for a total of 12,357. So it's a pretty big set. And again, these are all single-family homes, so condos, townhomes, and houses. In that grouping, if you do the math, it's 16%. 16% of all single-family homes in my area are non-owner occupied. So now you're probably already noticing a difference here. The 16% of the properties are non-owner occupied, but they're accounting for 26% of all the transactions, at least in this set that we've done. And that's pretty good. That's encouraging that a smaller group is creating a bigger result. I like that. If it had been the other way, we'd probably be turning around. But let's keep going. So this list rate is really interesting. What we're doing is we're taking the total number of owner-occupied actives and pendings and actives and dividing that by the total number of owner-occupied properties in the area. And we get this number, 0.00503. And now we're going to go look at the owner-occupied to get this same ratio. So we've got 6 pendings and 12 actives. That's the total. Add those together and then divide by the total number of non-owner occupied. And we end up with this number of 0.00888. And that's the list rate, right? That's just for that period of time, by the way, not over the course of a year, but just that period of time. That's the list rate. And if we compare them, then what happens is we take this 0.0088 and we subtract the 0.00503, and then we divide by that 0.00503 because that's our baseline, and that tells us it's 76% higher. The list rate is 76% higher for non-owner occupied. Wow. Wow. And that's what our conclusion is right here. So the non-owner occupied is 76% more likely to list than owner occupied. That's really cool. All right, let me share it one other way because maybe it'll help if you don't like math and you just want a little cleaner look at it. But again, we have a little more math, but it's just a little simpler to see. We had in my, I looked backwards, and the sales in my zip code, total sales for all single family homes were 486, almost 500 for the year. And then if we take the ratios of the 74% that were owner occupied, I'll assume that ratio will flow through. That would be 360 properties were owner occupied and 126 were non-owner occupied. Okay. And so now we're going to look at the turnover rates. So for owner occupied, the turnover rate is the 360 divided by the total number of properties in the area, 10,331. So there's our turnover ratio. That's what we want, 3.48. So about 3.5% of the properties turn each year in owner occupied in my zip code. Now we look at the non-owner occupied turnover rate, and to get there, we take the 126 divided by the total number of properties that are non-owner occupied, which is 2026. And this is the interesting number there. It's 6.22%. 6.22%. So 6.22. So 6 out of 100 properties in the non-owner occupied list and sell every year. Actually, sell every year. And just 3.5 in the owner occupied. So that's, as you can see, it's almost double. And when you do the math on this one, it turns out it's 79% faster in turnover, in how many properties are turning over in the non-owner occupied versus the owner occupied, almost 80%. So again, it's indicating this is a stronger market if you're looking for volume, if you're looking for transactions that are happening in a market. And so based on this is my conclusion. I'm strongly leaning towards working in that NOO market. And I'll give you just real fast a couple other quick things. The other benefits that are really kind of pulling me and drawing me towards this are, I've got a good source of contact information for these absentee owners, and that's what we call FRBO, or for rent by owner. So these owners, these investors, they'll put an ad out there to draw in a new tenant, and when they do that, you now have a lot of their contact information, their phone number, their email, the property address. From that, you can reverse direct into where their mailing address is. So you got a lot of contact information for them. The other thing that I haven't proven to myself yet, but I've heard and I can believe from my past experience, is that 70% of the listing presentations are done over the phone because you can't get into the property at that particular time. There's a tenant there, etc. And so you can do a lot of this over the phone and or Zoom. And well, that's very attractive to me because I'm trying to limit my time out there. I'm trying to do my whole business Monday through Friday between 8 and 5. And so the other thing is the owners of these properties are more analytical. They're less emotional. Now, the downside, by the way, is they're investors, and they're going to be a little harder probably to convince to pay a full commission. You got to look at both sides of these equations. My guess, and I haven't done the stats on it, but my guess is the value of the properties are a bit lower in this market, but I don't know that for sure yet. And so that's kind of what I'm looking at. And I thought I'd share that information with you. I'm leaning towards working the NOO market, or this absentee owner market, based on what I'm finding. It's looking really good. The data is looking good. But I had to do that research to make sure I wasn't going to spend a whole year working on a project where the numbers were bad, right? They were wrong, and my assumption was wrong. So I advise you that if you want to work in this market, you think this is a neat idea, be sure to do the research to confirm this really is a good market for you to be working in. All right, so hopefully that was helpful. I appreciate your time today. If you like this information, give us a thumbs up on the video. That tells us we're doing a good job. It also tells YouTube to share this with more people, which I'd really appreciate if you give us that thumbs up. The other thing is, if you have any questions about what we just wrote down, or you saw any errors that we had in our analysis, please write them down in the comments below so I can see what's going on. All right, I hope this has been helpful. Keep moving forward. Bye for now.